Welcome to the Trading Zone. I am Joe Tigay of Equity Armor Investments.
And I'm Brian Stutland, Portfolio Manager at Equity Armor Investments as well.
Brian, how you doing? Have a good weekend?
Yeah, great weekend. Kids back to school. I'm sure a lot of the country is feeling that too. So ready to get back into the normal routine now.
Already so early, or is it next week?
For Illinois, it's this week. We're raring and ready to go.
Why did I move? I need to come back. This is I'm waiting till the 3rd here, so of September. So I got 2 weeks.
Well, you Michiganders are late starters, so we're raring and ready to go. So is the market. Lots going on. Pretty big rally last week, right, Joe?
Yeah, biggest of the year. A fantastic turnaround. We talked a lot of people have talked about the yen crisis, the yen Mageddon, but just a tremendous turnaround and just a flood back into the risk assets is exactly what we saw last week. And if you're following us, that Monday of the show, we talked in detail about this. And really, I think to our credit, Brian, we talked about, doesn't seem like there's a lot of panic out there, in spite of the fact we got volatility in the 60s on, we were 55 on the spike index, 60 on the VIX index. So huge amounts of volatility. But in the moment, it didn't seem like a ton of panic. In fact, you didn't see anything in bonds. You didn't see any, like credit issues blowing up. So we're able to weather this, and it just looks like a blip in the road from right now.
Well, markets can go up and down, as we like to say, all of what feels like at the same time. And we had, pure panic last week. Well, really Friday and into Monday, and then it all kind of reversed. And it's crazy how quickly the markets can bounce back. It almost felt like there was one big institutional trade or banks associated to that institutional trade that wanted out, and it was overcrowded, and market makers really just needed to take the market down to levels where they could handle and sustain that level of selling. And once the seller was done, the markets rallied back.
Yeah, it was something to be seen. I just want to thank everybody for joining in today. Thank you. We know we love it being Monday. We've hung around for a little bit, letting people settle in here. So let's get into the show here, Brian. Let's get into the good stuff. So the week has begun, and pardon me, let me get in there. The week has begun, and we are getting more of a risk appetite. We're seeing more of this risk on trade happening. Of course, we're seeing the semiconductors leading technology, which is leading the way for stocks. AMD taking a big bite out of Nvidia by gobbling up one of its rivals. Just getting in there. I think I skipped the AMD slide. Sorry. There it is. There's the AMD slide. We also got another merger going out there with 7-Eleven. So there's some mergers and acquisitions going on. People are putting their money to work. They're optimistic about the future. When you see these types of M&A deals.
Well, I just hope July 11th I still get my free Slurpee from 7-Eleven. That's all I'm worried about with that merger. But this is really the real merger to take note of, because it's really a sign that AMD trying to get into the AI game with their chips. And it's interesting that AMD actually up on the day after announcing this. A lot of times when you're taking over something, the stock will go sideways to down because there's a cost to acquisition to that. And only later on do they realize the profitability. So it seems like the marketplace really likes this news on AMD, which is kind of exciting. We, full disclosure, hold this for clients. I have an option positions personally in here as well. So, this was some exciting news today.
Yeah, and more to the fact, though, I think the market's saying this was a good move by AMD, and that just shows that bid for AI technology, AI infrastructure is there, which really will lead us to our big story of the week. But before we get into that, let's just talk about this week ahead. We got Jackson Hole, really important event. Ahead of the yen Mageddon crisis we saw 2 weeks ago, we had that bad jobs report. People were pricing in 2 rate cuts by September. There was even some people looking at 3 or 4 cuts by September, so an emergency cut, then a double or a triple cut perhaps. on the prediction. The market's really come a long way since then. We've already all the way back down to the base case before the meeting was one before the jobs number was one cut. So we're at one cut back to September. The market really likes that. The one cut is the Goldilocks scenario. It's the soft landing for the economy. It's inflation is down, but the economy is not cratering, and the market can go higher with higher earnings.
Yeah, I think that's right. I think that's what the market will want to see, because I think more and more now focus is turning attention to the actual economy, to actual earnings, to unemployment rates as the biggest concern in the market. I mean, look, inflation, the target is 2%. We're not even close to there, and then factor in just prices have been up tremendously over the previous couple years. So yeah, I think it's tough for the Fed to get 2 cuts in one meeting and not at least do one and wait and see what happens. And so I think if we can sort of get that Goldilocks where the initial jobless claims over, that will come out this week, unemployment report in a couple of weeks, all that seems to stabilize a little bit. Maybe it's just one rate cut, because that's what I really would like to see in trying to control some of the pricing power that's been out there and the inflationary pressures. But yeah, Jackson Hole, that's going to be big. That's August 28th. Well, Joe, you and I will be watching that very closely to see how the markets react and move off of that.
Yeah, NVIDIA August 28th. That'll be really big for us, because it's been amazing recovery, and we want to get into this later in the show about how Nvidia really is turning around. The market's really following the semiconductors. See a question out there about leading indicators. I want to get into that in just a little bit. Let me just talk about our volatility real quick. The skew, we talked about this last week, just turned around amazingly, and that's continued to turn around, finding a little bit of a floor here, which is to be expected down at these low levels of the skew. Just anything to say here, Brian? Just what a smash in volatility.
Yeah, it was tremendous. The level of put buying we saw relative to calls. That's what the skew index indicates here. Right around the Yen-mageddon, I guess that's what you're calling it, Joe. And then all of a sudden, those put buyers dissipated, and the market was able to find a level that it wanted to rally off of. And historically, we've talked about this before. It's happened about a handful of times over the last 15, 20 years, the same sort of level of just put panic and then reversal back to the calls and, subsiding of put buying. And that has tended to lead to, significant rallies over the next 3 to 6 months. So we're sort of getting that. And, that's what's been sort of indicated here as a positive for the bulls, and we try to reposition ourselves, taking off some of the hedging that we had on, repositioning, rebalancing our positions for clients, and trying to play to the upside.
I mean, do you playing anything into like this like level here, how we've come all the way back down here? It would have made sense for like a new level of volatility to kind of exist in this range here.
Yeah.
To come all the way back down here. I'm not sure a lot of people saw that, expected that. We'll see if this holds, but this is just a really, really tremendous selling in these puts, and maybe just a vote of confidence for the market right here.
Yeah, I mean, I think there's a lot of wishy-washy going around in the market and reasons to be bearish, but this is one that I think says the market's going higher.
Yeah, and speaking of which, we've got this the VIX term structure continues to come down off of these lofty levels, really starting to finally get a little bit of the shape that the bulls want to see. We still have the front month below the spot here. The spot cash is above where the front month future, and maybe these future traders are still making an educated guess, or by putting their money where their mouth is, certainly that volatility is going lower in the short term. That said, they still expect elevated volatilities mid-November around the election.
Yeah, I would think that's spot on. The only thing maybe different, thing that I would add here is that when you look at where volatility and the VIX futures were 2 months ago, if the VIX is mean reverting, if sort of the skew factor is saying there's bullishness in the air, it does seem like the VIX futures curve, could come down maybe another point or so off these levels here. But we're getting closer to the point where I would probably be looking to be a buyer of VIX futures, maybe not quite yet, but very close to it.
That's good to know. Here is the chart we've been following all year long, Brian. This is the S&P 500 trend. We're getting closer to our big story here. But what an amazing shakeout, if this turns out to be a shakeout, because it looked for everyone who, and this was a very widely followed trend line. Everyone who was watching this trend line figured, oh, the bull rally is over. We're never getting back up to this upper trend line. And might as well just sell everything and just be thankful that we participated in the rally while it happened. Well, just in a matter of a week, we're all the way back into this trend line. So it looks like it could have just been a shakeout or like a false break negative. If we can remain in this upward trend line, that's certainly possible, where we can go and just challenge these all-time highs.
Yeah, and I think some of the leaders in this market are going to determine whether we can get back into that upper channel, or if this is just kind of sitting around the retest of that upper channel, getting ready to head lower again. But again, going back to that skew index says that we're going back in this upper channel.
Yeah, a lot of confidence out there. And speaking of the leading indicators, so we wanted to bring this up. We had a question earlier in the show. We were talking about leading indicators. We had Nvidia earlier. And this is a great question. It's just, how do you utilize leading indicators when it comes to following the markets? And I view the semiconductor index as leading indicator. And we were watching this closely. You were following our show a month ago. We were talking about the great rotation. We were saying, yeah, the market could still make all-time highs. If we're getting leadership from the banks, we're getting leadership from the small caps, but we need the participation in the semiconductor index, and they were leading the market lower. So they were going lower, even though the market was kind of flat, stagnating for a while, but the semis were leading and saying, hey, things are going south. And of course the market eventually did follow. So looking closely here, we peaked in the semiconductors early in July versus the S&P 500 was much more mid-July. So it's happened. So definitely leading. It was a signal, hey, the market's going to be going lower here. Be warned. And of course, it followed. So it's really great news that the semiconductors are much stronger on their recovery. They're above this spot where this spot right here, which was where the S&P is currently. So they're much stronger on their recent recovery. They're leading the market up now. So for me, it's really going to come down to when we're talking about the Fed and their 25 basis point cut hitting the sweet spot. It needs to have a strong economy. It needs to have strong earnings. We need to have leadership from the semiconductors. What does that lead me to? That leads me to Nvidia's earnings coming up next week. Real quickly, this is the semiconductors zoomed in here. This is a 50% retracement right off of their recent high to their recent relative low. That's where we are right now. This is a really crucial spot for the market, really crucial spot for the semiconductors. And this is what I'm looking at for the leading indicator. Which way this breaks, the market's going to follow. And this will be on Nvidia. Good news for bulls is Nvidia's chart looks pretty solid ahead of the earnings.
Yeah, I think when you look at this, yes, the semiconductors is stuck right about that 50% retracement from low to recent high to low. So the question becomes, is there something dragging it? Is there going to be something leading it? And, you look right here in NVIDIA, it's regained more than 50% of its retracement. To me, it says NVIDIA is the leader of the semiconductor index. It is the leading indicator, maybe the predominating leading indicator of the stock market. If you're looking at a single name, this could be one of them. Look, when the semis kind of rebounded and we hit that 38% retracement, we sort of re-upped our allocation to the semiconductors, or the ones that we like. NVIDIA is one of them that we like. Joe, you and I both have talked about it and how it is a leader in there. And we had sort of dumped and lowered our allocation to this sector of the market back in the middle of July. And so now I think it was time to sort of re-add. And the reason being is NVIDIA right here. If it's the leader and if it's the one sort of getting back towards all-time highs, a good earnings report, may send this entire market higher.
Yeah, and it just makes a lot of sense when you're following this closely every day, like we do. We saw Nvidia after their split, jump up to 140, close to 140 for no good reason. Not the best time to be adding there. Very cautious. I think that's when we're just looking at, hey, does it really make sense? But then it pulls all the way back 40% down to 100. Yeah, there's a different story there, Brian. It's a different valuation. It's a different company from a portfolio perspective. So yeah, it just makes sense to have that in mind. And to kind of lay this out before the volatility happens too, because when you have the plan, when you have the vision, it's so much easier to execute because there's a lot less emotion involved. It's, you're not like so fearful, like, oh, I don't know what's going on. But just to have that plan on and say, hey, it's pulled back to an area which looks attractive. I got some cash on the sideline. Let's party. I think that's the right way to go. But ahead of this earnings, just looking at it right here, we've looked at using a little bit of this momentum, just looking at a trade to put on today ahead of next week's event. And it is drum roll, please. You ready?
Dun, da, da, da.
August end of month options we'll be looking at. This is basically at the money, the 127 call, selling the 140 call. Kind of just looking for it to get to right about the all-time high. We're not looking for a larger than normal move for Nvidia post earnings. We look down here. We have the average move is 7.25. The market's implying 9.3%. We're basically saying in line with the market expectations to the upside. And we have a risk-define trade here. We're not going to lose more than the 450 on this trade. We cap our upside to make it a little bit cheaper to get into the name. But I think we're comfortable with that, saying it's not going to have another 30% move. We've seen so many of them recently. I think we were looking, it was 4 out of the last 6 have been larger than, the market has average moves to the upside. So maybe we'll get burnt by it being a 30% move. I'll be happy if it is. I'll get my 10% of the upside and just be out.
Well, I think when you look at this, let's just break it down a little bit. So the cost of the trade, $4.50. The max gain, a total of $13 where you'd be called away from the position here. So in other words, net profitability, making $850, risking $450. So it's almost that 2-to-1 payout. And when you look at earnings, like you mentioned, Joe, of the movement, the level of movement in the stock, where 4 out of the last six earnings have seen 9% or more movement, that puts you right up at that 140 level and the payout. So the odds playing are about equal here. The beauty of it, the extra kicker you get, is that if it's earnings moves to the downside of 9% or more, I'm only risking $4.50 on a $120 something stock. So here I risk less sort of to make the same odds potential play payout to the upside. So I like this as a stock replacement, or somebody who felt like they missed out on making a move into Nvidia after it had been down. This is maybe a cheaper way sort of to play it. Look, full disclosure, we own Nvidia for clients that are clients of Equity Armor Investments, and so we do like the stock, Joe, you and I, but this is maybe an options trade that I'll be looking sort of to put on myself to trade ahead of the earnings play. It's a binary situation, right? The earnings move is either going to happen or it's not. These options expire at the end of the month, so they're either going to pay out or they're not. And I think this is a calculated. If I'm a casino, I get to kind of be the casino because I think the odds are a little bit in our favor. And so that's why I just like the odds play on it and would make a small allocation to this trade.
Yeah, and we have some time before the event. If the market continues its momentum, Nvidia will be there with it. This is something we can even take off before the earnings event, hopefully for a nice little winner. We know very unlikely to see a lot of decay on that call, through this week at least, because people will be bidding up volatility through the earnings event through next week. So I'm very comfortable holding it through Friday. And then looking at it again, saying, if Nvidia is trading 132 on Friday, maybe just taking it off for a nice winner. I'd be just happy with that.
Yeah, that's right. Because there is some directional play to this, obviously. Well, not some, but a lot of directional play to this. So no reason not to. So, tune in. We'll try and update this trade on our Twitter handle. If we do want to, if I feel like I want to take this off myself before the earnings event, but certainly this is a momentum trade to the rest of the stock market. It's a leader of the stock market, and it's a trade on an earnings bet that we feel like is a very well calculated trade to make.
Yeah, I mean, people in AMD throwing $4 billion at one of their competitors. There's still money sitting on the sideline. People have money. They may have sold. People might have sold Nvidia 2 weeks ago or a month ago, deciding to get back in. So money is still out there. We're seeing liquidity is still there. People may decide to get back into Nvidia ahead of those earnings. We'll see. For me, it just seems like liquidity is back. It was gone for a heartbeat, and it is 100% back right now. The leadership is looking to retake the mantle. We'll see if that can hold. If Nvidia does have good earnings, I think it's a very strong case. We'll see the S&P 500 make new all-time highs in short order.
Yeah, and sort of just to button up the show and tie it back to the beginning before we wrap things up, though, Joe. You look at the merger. We talked about that AMD, or the acquisition that they're making here. What do you make? Can AMD really be a player in this Nvidia world? We talk so much about Nvidia right now. We gave a trade on it. Obviously, we like the stock, but can AMD sort of compete and get in the game? And is that acquisition they made earlier an indication that they're going to be a major player in the AI chip race and computing power?
Well, 100% we love NVIDIA, but we also like AMD. We like a lot of other places in the AI trade. AMD has its role in the AI world. I think this is just a sign that while NVIDIA has the advantage, it's a sign that there's money to be made, following NVIDIA, doing what NVIDIA is doing, trying to catch up. NVIDIA's got the lead. They have the best software right now on these chips, so the best AI software. So people need to catch up. It's a good sign that people are looking to catch up, and it's a great sign the market's rewarding AMD for their efforts. It's also a great sign for the rest of the AI space. We've talked about some of these names in nauseam on the show. A couple names we love are Taiwan Semi, ASML. Taiwan Semi makes chips for AMD and Nvidia, so I think they're a big winner in this acquisition. ASML makes the machines that makes the machines for Taiwan Semi. So I think this whole ecosystem still is looking very strong. It's still at the very beginning stages of the AI revolution. We're still at the stage where we're building out the hardware component. The software is coming next. We like some names there. We love PLTR. We've talked Palantir a lot on this show, which is another one of our favorites, which is just rocking and rolling in this latest recovery.
Yeah, I mean, we have an AI portfolio that we use for clients, and so some of the names that Joe listed are in there because obviously I think they'll participate for the reasons that he gave. And I think when you look at it, AMD's acquisition shows that if you look back to the mid 90s, obviously, and the information technology revolution and web pages, there were a lot of winners, there were a lot of losers. I don't want to go all in on one person and bet that because others can emerge. But what I think is interesting, just to button this all up, and what's occurred with the market recently is, remember, in 1998, you had the Russian debt crisis, and the Federal Reserve came and started cutting interest rates, and they went one step further than people expected, similar to where we're at right now. And I wonder if some of these rate cuts will help stimulate the market and push it back to all-time highs and beyond, the same way it did in 98. Hopefully it's not a blow off top and over exuberance like 99, 2000 we saw, because we know what happened after that point. But we could be around this like 96 to 98 point in the cycle, similar to what we saw back there. So, I don't want to miss out on this. And that's why we continue to give, option trades weekly to sort of be able to play this and stay in this kind of game.
Yeah. So, the way this market's probably going, the bull market is going to end, I think, is an economic slowdown. It can come from many ways. Economic slowdown. Historically, 2008. I can't really predict 2020. That was just like hopefully once in a lifetime pandemic. But 2008, we had a bubble in the housing market that kind of kicked off the recession. 2020 or 2000 bubble in the .com, bubble in tech stocks, which kind of kicked off a recession. Before that, you have oil shocks, which kicked off a recession. So it can come in different fashions, but there's usually some sort of event kicking off a recession where the table is set, everything is right for a recession to happen. We're at the right time for it. We haven't just been triggered by any one of these events yet. So we're just kind of waiting for that. I expect it to happen at some point. I've kind of been long in the tooth on this rally. If you really kind of ignore COVID, which kind of just added a bunch of fuel to the fire, we're really kind of overdue for a meaningful recession. So we'll see what happens. But yeah, I'm definitely expecting some in the next year and a half, some event to happen to kind of trigger it.
Yeah, well, like we said, I'll be watching the SMH, the semiconductors. If they make new lows from what we saw before, that would be very bad, I think, for the market. If economic conditions, decline here on some of the data coming up in recent months, that'll be very bad. So these are a couple of things, and then the level of volatility and put buyers that are out there. So, look, this kind of maybe wraps up our show here, because I would just be tuning in every Monday, not to talk up our own book here, but every Monday, 1 p.m. Eastern, we come on, we talk about the markets, the macro ideas that are going out there, the volatility space. Keep tuning in. I think it's going to be critical to keep watching in the coming weeks as we sort of reach this, cusp of, can the markets go higher, or are they going to roll back over to lower positions? All these leading indicators are something to watch. So, Joe, I think that about wraps up our show. I'm Brian Stutland here from Equity Armor Investments with my colleague Joe Tigay, and come tune in every Monday, 1 p.m. Eastern at the Trading Zone, sponsored by the MIAX. We thank you. Make sure you tune in, and we will continue to update the markets as they move.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.